You're tuned in to Agriculture Today, and we start our Friday show as we normally do with a grain market update. And as always, we're joined by Key State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Starting off this grain market conversation, as we normally do, with talking about what are futures doing.
Well, in this most recent 2 weeks, we've been up, down, sideways, and all over the place. Here on yesterday's markets, after a lot of volatility earlier on, and 1 or 2 days really dropping sharply. September corn, 23 corn closed at 480, down 30-40 plus cents from where it had been not too long ago. Deese corn, the new crop harvest contract closed at 493 and a half on Thursday, and again that's down below $5. In looking at where that September contract has gone, if you look at recent charts, in essence, it's gone back down to recent lows. And when a market and futures traders don't know exactly where to go other than direction, they pay attention to where they've been historically. And back in early July, we had gotten down to just about this very same level, about 480. There is a move lower down to 471, 472. So this day, as we're talking about this, is a pretty important day. We're testing historic lows, or recent history lows in these contracts, and this is the battle of the bulls and the bears versus the bears, and in the last bit of time, the negative sentiment has prevailed, and I think just overall for corn, driven by some rains that have come, generally more optimism on the condition of the crop, etc. I think, as I kind of struggle with that direction on all that to understand, I don't know if the recent rains are enough to overcome any damage that was done earlier. I think a week from today, when we have the August 11th USDA outlook crop production and WASDE report, we'll find out what farmers have told the USDA they think they'll have, but the USDA will have not gotten out into the fields and surveyed what they actually see. Then in September there'll be another survey of farmers, and actually the USDA will send their enumerators out, their plot checkers, and they'll have all that much more probably sound numbers. So August 11th will be important, but that September report I think will be all that much more important. That'll be the first time we've gotten out in the field to see what's going on. So that's kind of the situation with corn futures. For soybean futures, they had also dropped considerably from where they had been. The lead August contract now is closed yesterday at, well, of course, it's in its delivery time frame, closed at 14.28 3/4. September, where what we're pricing off of now at elevators, 13.82, and those contracts were upper 14 to 15 not that long ago. Stand back and against all. A little different situation with soybeans, in that we had at the top of this recent run for the September contract, 14.90, something like that, and now we're more than $1 below that. But the historic recent history low to be looking for is more like so we closed yesterday 13.82. We had seen a low of about 13.35 or so not that long ago, another one at about 12.75. If soybeans keep dropping down to those levels, then you'd wonder about a change in market direction, and there is some risk of that. Again, August is, if we have good conditions, the market can perceive that we'll have a large crop, all that much larger of a crop, and you could see soybeans going lower. Wheat is just like corn, as far as I see on the futures. We had gotten to highs of about 925 or so within the last 2 weeks on the high side, and now yesterday closed at 767 and a half. and that happens to match a low we had gotten down to in late May coming into June. And there's another low below that at about 740. So I guess we're all chartists now, as we start watching these price moves. And again, I think what you're looking at is a situation where the market is groping to figure out where to go. And uh, go price wise, and with that, there's you do see the market paying attention to where it has been historically for lows, and at least stops and looks in most cases to assess, is this trend something we should continue? Should we break that? What's current history or not? So interesting to look at all that. I might add in, if that's okay, since we're talking wheat, winter wheat harvest pretty well done. If in fact, the main thing right now for winter wheat is that we have some reports of some wheat being imported hard red winter wheat being imported into the U.S. Of course, that has the attention of hard red winter wheat growers without question. So we see that, understand that, and that's going to work itself out. Spring wheat has been affected by hot, dry conditions up in Canada. And you look at the most recent ratings for spring wheat, and you've got South Dakota showing about 30% poor to very poor, 42% just fair, and North Dakota, the other big player there, 18% poor to very poor, 38% just fair. So you've got I guess you're coming into the place where you're just beginning harvest in those areas, and then we'll answer the question, has the heat that's come in late really affected those crops or not? So I guess we're in weather markets on the one hand, and still watching Ukraine, Russia to see what goes on. I just would add in on that. It wasn't but a few days ago that Russia had said, we're not going to go forward with that no matter what. Well, we keep hearing of discussions of perhaps one way or another to have the some type of agreement, or at least to be able to see Ukrainian crops flow out of that part of the world. So we could talk this whole session on that, and Antonina Broyaka could do a lot better job and with all the details of it. And I think she is a guest of yours, has been or will be. So point is that there's the world still is bouncing up and down in its feed grain, in its wheat markets, and oilseeds being affected too by what happens in Ukraine, and whether this country that's been called historically the breadbasket of Europe, whether they're able to grow crops first and export them second. And of course, they're doing that in the middle of a military conflict, and that's just causing all sorts of problems.
Dan, seeing a ton of movement right now for many different factors, and is that movement also carrying over into cash market?
Well, yes, as the futures have dropped off, of course, you see that that basis levels in most cases haven't changed that much. So as the futures have dropped, you keep about the same local basis, and we've seen prices fall. It's interesting that for corn, the top price in the state, $5.81 in Garden City, about $1 over basis. Second highest price, $5.67 at in the Columbus area. Colby out of 561 at 80 over, and then other, Topeka, Hutchinson, et cetera, all doing decently. You still have some movement in grain sorghum. I'll try to expedite and say this quickly. So grain sorghum prices all have a positive basis. Strongest bids in Topeka and Columbus at 25 over the futures. So interesting to watch that. Soybean bids, they were 14 plus. Now they're all along the line of 1350 to 1390, something like that, in these areas across the state that we're watching. Some pretty decent basis bids actually in Colby and Hutchinson. So go figure, with Colby having a strong basis bid. And for wheat prices now, with the drop off in futures, we're basically seeing a range of the top price, Salina 752, lowest price, Colby 702, and just variation in between. So I guess So our farmers, as they have wheat in hand, we've come into this time frame. Prices have softened during harvest time, and those that have cash flow needs will no doubt probably move some wheat if to generate some revenues. Others probably storing that, wondering where we'll go down the line. And for those that are storing these issues of the possibility or seemingly reports that wheat might be coming into the country really is a pretty important thing in their viewpoint.
And something focusing kind of on corn and something that pairs with that is ethanol. And a recent report came out about that from the USDA.
Yes, sorry to cough there. With the drought we had last year, Kansas corn prices at ethanol plants were strongest in the nation by far, except perhaps Nebraska being near them. And it now turns out this year that the strength in ethanol plant bids is more in Iowa, heading to the east, and that it kind of matches up with what the drought maps are showing, as there are more concerns there locally for having adequate supplies. So just for instance, for August the 3rd, the average Kansas ethanol plant price was $5.38, range of $5.10 to $5.63, but the average prices in Illinois, Indiana, eastern and western Iowa all were running $5.48 up to $5.77. Strongest prices actually in the whole country at on average in Ohio at $5.81. So just a tale of where the drought's hitting or not. And again, as you look out here in Kansas, we're generally optimistic with the moisture we've had of having supply, so that affects the bids.
So overall, as we look at this market, seeing a ton of movement, and can producers expect to see that moving forward?
Yes, we're with these USDA reports coming up, as we talked about earlier, the market will have solid numbers, and if I guess I would think that this next report probably the USDA without their own surveys probably not likely to make a lot of changes in the yields, but where I guess both the risk and opportunity it would be when we get the September WASDE report, the October report, and if it turns out that there's a surprise, again, this corn damage earlier in the year that we couldn't overcome, et cetera, then you're looking at potential for higher prices. It's just thought provoking to remember how in a number of years here of late, the lowest corn price that we'd seen in a number of these years came around September 1st, as the market had kind of given up hope, of a short crop, and yet we hadn't seen the buyers really come in and start buying yet. So if we are heading for a low, I wouldn't be surprised that first part of September before that USDA WASDE report has been historically kind of where we have been seeing them.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. Appreciate it.
That was Key State grain economist Dan O'Brien. We're getting to a short break now on Agriculture Today, but we'll be back with more ahead.